and let's get sense of what the markets have done today. A very surprising recovery that we've been seeing, and to understand more about the market moves that we can expect going ahead, we're now being joined by our in-house technical expert Kunal Bothra. Kunal, hi, thanks so much for joining us today. Help us understand, right? Because we've been seeing some correction over the last few trading sessions. Today, a very welcome recovery, I would say. So, do you think that the bulls are at play only for today? Do you think today was just a one-off and there is more legs to this correction left, or do you think we can expect some positivity going ahead?
Good afternoon. So, my sense is that this was a relief rally, much needed relief rally after yesterday's and last 3 days or 4 days of very heightened kind of a price correction for mid caps, small caps, and individual large cap stocks as well. Relatively, I think the benchmark indices have done reasonably well. So Nifty is still holding on to that 22,000 levels broadly. We had a touch and go moment yesterday, sub the 22,000 mark, but net it's we've been protecting this key support for the indices. Both the bank Nifty and the Nifty are trading above their respective 50-day moving averages. So that's also another comfortable sign for the index over the near term. Ideally, in this kind of a scenario, when stocks go into a process of a bounce or a relief rally, we generally expect the asset classes in the stocks to get into a double dip towards retesting the previous swing supports and then forming a major bottom for themselves. So I would believe that over the next couple of days, there could be a lot of better opportunities and window which could be open, where traders could look at buying stocks on correction as well as trying to map up the portfolio for themselves. The indices holding on to that key moving averages, I think, is a very strong signal that we are into a very strong bull market or an uptrend, but it was just a corrective phase, a much needed one for the mid caps and small caps.
All right, Kunal, big words coming in. Of course, Bank Nifty both took support at its 50 DMA, and that's we saw a relief rally. So, which stocks can participate from here in this relief rally? More, coming in from mid cap, small cap, or large caps would be your preference?
It's a mix of large cap names, but I would probably pick two differentiated sectors. So one of them is the IT stocks, and I would believe strongly that the likes of Wipro could make a very strong comeback from here on. The stock is on the verge of breaking past our major 3-week downward sloping trend line. So this could be a stock which should be on traders' radar, expecting a target of 550 with a very immediate term, stop loss at 500. And DMart is the other stock which I've been very bullish on from levels of 3,500 and earlier. I would believe that at current levels of 4,000 also, the stock looks very attractive. It's inching towards a breakout on the shorter term chart. So 4,400 as a target for DMart, and stop loss could be kept at 3,850.
All right, Kunal, well, thanks so much for joining us today and for sharing your picks and your market view going ahead as well.
If you like this video, then like, share and subscribe to ET Now.